Welcome back. It's time now to take a look at the top business stories. HSBC's February PMI index posts record high for UAE private sector. UAE and Qatar to inject cash into Spain's savings banks. And Steve Jobs is back to unveil the iPad 2. Let's look at the equity markets first. The UAE bourse is headed in opposite directions today. Dubai's benchmark, the DFM General Index, lost 1.6% to close at 1,352 points. The real estate sector fell the most, with heavyweight Emaar properties losing 3.6% today. Other stocks to watch were Dubai Islamic Bank, which lost 0.5%, while Commercial Bank of Dubai gained 1.7%. Arab Tech Holding dropped nearly 5%. DER Development fell by 8.3%. 145 million shares were traded, valued at 197 million dirhams. And over at the Capital Stock Exchange, the ADX rose 0.1% to close at 2,529 points, with the banking sector posting the strongest gains. National Bank of Al Quwain gained 8.3%. Abu Dhabi Commercial Bank rose 1.4%. Abu Dhabi Islamic Bank rose by 1.7%. First Gulf Bank posted a plus of 1%. Commercial Bank of International, though, lost by 10%. Telecoms operator Etisalat also lost by 0.5%. Abu Dhabi Aviation Company lost 2.8%. And Gulf Pharmaceutical Company, 2.6%. 65 million shares were traded, valued at 96 million dirhams. And now let's have a look at the GCC markets, which today ended lower again. And to talk about the markets this week, we're now joined by financial analyst Bruce Powers. Welcome to the show, Bruce.
Thank you.
Let's look at Europe first. The European Central Bank today held its monetary meeting. Rates are staying on hold. What are your expectations? When will the ECB raise the rates?
Well, I don't think we'll see them raise rates till at least June, maybe not till October. If we look at inflation in the Eurozone, it is a little high in February at 2.4%. And it's been above the target rate of 2% for the past several months. But the economic recovery in Europe is still pretty fragile. Remember Portugal. If we look at the yields on Portuguese government debt, it's up near record highs, not seen since the beginning of the euro. So their cost of borrowing now is extremely high, and expectations are rising that they're going to need some type of financial assistance, maybe as soon as the next month or the next 2 months. So I think that situation has to be resolved before the central bank was seriously going to consider raising rates.
Let's look at the UAE bourses. We had losses again today at the DFM. The DFM fell to a 7-year low already yesterday. Is now a good time to buy as prices are low?
Well, maybe a little early. If we look at the longer-term picture, the DFM has been in a long-term downtrend since November of 2005. So that's over 5 years. Now, earlier in the week, we broke through important long-term support, and the selling has continued even into today, as you mentioned. So there's no sign yet of a bottom or any kind of a bounce. At some point, we will see a decent bounce, and the market will have some recovery, but the long-term picture now has gotten more bearish over the last month. So I would anticipate that we could see even further lows. Below, wherever we find a bottom in the near future, we very well could break those lows later in the year.
Thank you very much, Bruce. Have a good weekend. And now to our top stories. Business activity in the UAE's private sector hit a record high last month, driven by an increase in new orders and output. The HSBC UAE Purchasing Managers Index recorded a rise of over 53 points in February. That's the highest level since 2009. The PMI index measures the performance of the OPEC members' manufacturing and service sectors. Economists say these results strengthen the UAE's economic outlook and that recovery is gaining traction and beginning to build speed. They also say that an increase in output prices indicate more resilient consumers. The new orders index rose to 57.6 points in February, up from 56.1 points from the previous month. Experts link this to improving economic conditions and company expansions. The UAE and Qatar are looking to inject large sums of cash into Spain's banking industry. His Highness General Sheikh Mohammed bin Zayed Al Nahyan, Crown Prince of Abu Dhabi and Deputy Supreme Commander of the UAE Armed Forces, said the UAE would provide 761.2 million dirhams to finance the recapitalization of the Spanish savings banks. This comes after the Qatari government said it would provide 300 million euros to the savings banks as an investment into the economy. José Luis Rodríguez Zapatero, the Spanish Prime Minister, said both parties were interested to continue to invest into the country. The merger of smaller banks as well as cross-border expansion of bank operations is needed within the Arab banking industry. That's according to the chairman of Union of Arab Banks. Chairman Adnan Youssef said Arab banks' liquidity levels were a key challenge facing the industry for this year. He added that cross-border liberalization will help banks to take their proper roles on the international front and that banks should focus on increasing their funds. He also stated that despite a general decline in their profits over the past 2 years, Arab banks are still performing well compared to banks in the West, where many are still reeling under massive losses. Dubai is set to play a bigger part in the region's economy as it emerges as a safe haven for global investors. That's according to ArabianMoney.net. Peter Cooper, the website's editor, says the established legal system of the UAE promotes the country's business opportunities. Infrastructure and stable governance make Dubai an obvious choice for business and investments, he said. The editor also added that Q3 is set to see a rise in UAE stock values, with silver to be the top-performing asset class of 2011. And in our fast financial news, Dubai-based telecoms operator Du recorded a 132% rise in net profits before royalty to 1.2 billion dirhams last year, compared to 528 million the previous year. The UAE federal government announced that the annual royalty rate for the company as of January 1, 2010 was 15%. Revenues exceeded 7 billion dirhams with a 32% increase for the full year in 2010. Etisalat is still interested in acquiring a 46% stake in Kuwaiti telecoms operator Zain, even after the National Investments Company announced that the sale of the Zain stake to Etisalat had been terminated. An Etisalat spokesperson said the company's stand towards Zain's acquisition has not changed. Etisalat was still interested in acquiring a majority stake in Zain. Lulu Hypermarket is reportedly looking at bypassing middlemen. The supermarket chain aims to go straight to goods producers by the end of the year to reduce its cost for goods by up to 70%. The chain currently buys 50% of its food directly from producers. By bypassing distributors, Lulu could reduce the prices it charges its customers by up to 15%. And after the break, we will run you through what's making the headlines in international business, so stay tuned.